Being an Indian taxpayer, you always understand that you need to pay 20 to 25% of taxes from your income, but we need to know that for salaried employees also some expenses allowed for deduction and exemption and allowances. It will help you figure out how tax saving for salaried class works and avoid complications that may arise during tax planning. If you find the appropriate financial instruments, you can reduce the payable income tax for salaried employees. Here are few points where you can save tax on. Option 1. Leave Travel Concession, LTC. Leave Travel Concession is an exemption that salaried employees receive from their employer to travel on leave. But there are some conditions attached to it. Some of them are: 1. The employees must go on an actual journey to get tax exemption. 2. Only domestic travel expenses are considered under LTC exemption. 3. The tax savings for salaried individuals apply on actual travel costs like bus or rail fare, but not on miscellaneous expenses such as local sightseeing. You should also know that LTC cannot be treated as a tax-free income every year under Section 10 Clause 5. It is only allowed twice in block of 4 years. Option 2. House Rent Allowance, HRA. Individuals living in rented accommodation can avail tax benefits for salaried employees as per the related rules. HRA or House Rent Allowance, HRA, a part of an employee's salary structure, is not fully taxable, leading to income tax deductions for salaried employees. The amount of exemption is least of the following: A. Actual HRA received. B. 40% of salary, 50% if house situated in Mumbai, Calcutta, Delhi or Madras. C. Rent paid minus 10% of salary. Salary is equal to basic plus DA, if part of retirement benefit, plus turnover-based commission. What makes HRA one of the tax-saving options for salaried individuals is that a part of it is exempted under Section 10 Clause 13 AM, subject to certain clauses. The taxable income is calculated after deducting HRA from the total income. Option 3. Allowances exempt under Section 10 Clause 14 Subclause I. Daily allowance, it is the expenditure granted to an employee to meet the expenses on place other than office place in performing of his office duties. Helper or driver allowance, for driver taking you to office from home or home to office. Helper to assist you in administrative activities. Academic allowance, allowance granted for encouraging academic, research and training pursuits in educational and research institutional. Uniform allowance, for maintaining dress code. Option 4. Reimbursement exempted. Mobile reimbursement. An employee can claim reimbursement of the actual bill amount paid or amount provided in the salary package, whichever is lower. Books and periodicals. Employees incur expenses on books, newspapers, periodicals, journals, and so on. The income tax law allows an employee to claim a tax-free reimbursement of the expenses incurred. Option 5. Health insurance premium. Health insurance plan provides financial security to you and your loved ones in medical emergencies or planned hospitalization. Besides safeguarding your financial interests, health insurance is one of the most used tax-saving options for salaried people. In general, the premiums paid towards health insurance are eligible for income tax deductions for salaried employees, subject to the term of Section 80D. As a part of planning income tax for salaried employees, you can benefit more from this provision by paying for health insurance of your spouse, dependent children, and parents. The maximum deduction you can avail under Section 80D is 1 lakh rupees. Option 6. Standard deduction. You can get an amount up to 50,000 rupees as deduction by default. You need not have to do anything specifically to get this deduction. Option 7. Deduction under Section 80C. The maximum amount of exemption you can get under Section 80C is 1,50,000 rupees. You can get the exemption by expending in the following options. Life insurance premium paid by an individual, spouse, and child. In the case of HUF, on the life of any member of HUF. EPF employee contribution can be claimed for deduction. Public Provident Fund paid by an individual, spouse, and child. In the case of HUF, on the life of any member of HUF. National Savings Certificate, NSC. Sukanya Samriddhi Account, ELSS or Tax Saving Mutual Funds. Senior Citizen Savings Scheme, 5 years post office or bank deposits. Tuition fee of kids. Principal payment towards home loan. Stamp duty and registration cost of the house. Option 8, National Pension Scheme, NPS. National Pension Scheme, NPS, is one of the long-term tax-saving options for salaried people in India. It is an investment plan that falls under the purview of PFRDA and the central government. People who want to plan for early retirement and have low-risk appetite invest in NPS. Besides, it also serves as a means for income tax deductions for salaried employees. Tax benefits for salaried employees can be claimed under Section 80 CCD Clause 1B for 50,000 rupees over and above 1,50,000 rupees ceiling under Section 80 CCE. Option 9, Tax Rebate under Section 87A. From the financial year 2019 to 2020 onwards, a rebate under Section 87A is inserted to exempt taxpayers whose gross total income is less than 5 lakhs rupees. That is, if your income is less than or equal to 5 rupees lakhs, you are exempted from paying income tax. Option 10, Deduction under Section 80E. If the loan is taken by an individual for any study in India or outside India, then they can claim the deduction. The interest part of the loan on such education loan can be claimed for deduction for pursuing individual's own education or for the education of his relatives, spouse, children, or any student for whom the individual is legal guardian. The entire interest is deductible in the year in which the individual starts to pay interest on the loan and subsequent 7 years or until interest is paid in full, that is, for total 8 years. Option 11, Income from house property. If you have a housing loan, then you can save tax up to 2 lakhs rupees. The interest paid on home loan, maximum 2 lakhs rupees, if the house is self-occupied. Also, if it is your first home, you will get a deduction for first-time home buyer under Section 80EE. You should be extremely careful and should submit correct information while submitting the returns as amended by Finance Act 2022. Reports as misrepresentation or suppression of facts or claim of expenditure not substantiated by any evidence is considered as deemed underreporting and penalty may be levied. Thank you for watching. For more updates, do subscribe to my channel.